We just got the consumer confidence and home price index data out at the top of this hour. For reaction to those numbers and the news about Fed Chairman Ben Bernanke's renomination, we're joined now by Julia Coronado. She's senior U.S. economist at BNP Paribas. Julia, thank you so much for joining us this morning.
My pleasure.
Where to begin? I guess we should start with those better than expected consumer confidence numbers that we saw released this morning. How do we temper that against the news that from the White House and from the CBO that unemployment looks to climb to 10% or above?
Well, I'd say on the whole, it's a reasonably positive batch of news we got this morning, including the renomination of Chairman Bernanke. And as you mentioned, this is against a fairly negative backdrop. So consumer confidence improves in August, but it's still very depressed. Home prices are still falling, but not as fast as they were. So it's a positive relative to the absolutely horrible backdrop we're coming out of. And I'd say on confidence, it's a little bit curious because we saw the Michigan measure just a little over a week ago decline in early August, and then the Conference Board measure improved. So a little bit of mixed signals there.
When you take a look at home prices, I know we've looked at the question of sales, the question of building. There has been some characterization there saying that perhaps we've bottomed, perhaps we're rebounding. When you look at prices, where are we in this? Because until people know the value of what they hold, a value of what they own, can we really say that the housing market is turning?
Right. So one issue is for the housing market itself, and I'd say prices have fallen to the point that we're now seeing some demand come in. So we've seen sales improve quite a bit in the existing market. Now, that improvement is built on foreclosure sales and first-time home buyers, so it's still not clear how sustainable or how deep that demand pool goes. But you're right, for the broader population, for most consumers, it's still true that their home prices are falling. Excuse me. That's going to imply ongoing conservatism. The consumers are going to still be conservative when they make their spending choices because their house prices are still falling.
When you heard this morning of the renomination of Fed Chairman Ben Bernanke by President Obama, what did that signal to you in terms of what you can expect in economic policy going forward from today? More of the same, or are you seeing sort of a shift in Bernanke in this second term?
No, I think we're going to continue to see the same proactive, aggressive stance from the Fed chairman and from the FOMC, broadly speaking. So I think, and that's a positive thing. And I think the Obama administration very wisely took advantage of what's basically an era of relative optimism in the markets right now. The data's flowing a little bit better. The markets have improved. The tone has certainly improved a lot. He's taking advantage of that, getting the chairman in place in case we might see some backtracking in the data. Right now we've got some stimulus coming to bear. You could see some stimulus let down later in the year, but we'll have the Fed chairman there, in place, locked in, so that uncertainty will not rock the boat.
All right. Thank you so much, Julia Coronado of BNP Paribas, senior economist there. Thank you so much for joining us with your instant reaction.